Good afternoon, everybody. Welcome to your TraderMerlin show. Sorry for all the confusion out there. I see people going, wait, Lisa. Yeah, I am, even if I wanted to do a show tomorrow, I can't because Southern California Edison is actually cutting the power to my neighborhood from 9 a.m. until 3 p.m. So that's one of the reasons I won't be doing a show. But it's celebratory. Tomorrow's my birthday, so I make it a point to never work on my birthday. My employers have all learned that I basically, since I believe that when you were born, you didn't work. Everyone just pampered you and took care of you. So that's my belief on my birthday. You should just not work. Just do what you want to do and take care of yourself. So that's what I'm doing tomorrow. And then Friday, I'm just going to roll straight in the weekend because I got a bunch of planning to do for some events that are going on. Anyway, that said, man, you regret sometimes getting out of trades. I'm all of a sudden bummed that I closed out my Russell trade. But as you know, I followed the plan, stuck to it. And I did think we were going to continue on down, but I just didn't want to be stuck with big positions over the weekend. So I lightened up. Now, it's funny because today I was really looking at maybe selling some puts. I thought about maybe going directional on a couple things that I thought may have bottomed out. But I just went, you know what? Nope, not going to do it just because let's roll through the weekend, Halloween weekend, without any major exposure. I still have some positions, though, but nothing too big. So that's the picture there for today. You guys, the old wizard, I thought it was kind of funny. Unfortunately, I don't have a drink in my hand, but I will have one on Friday, that's for sure. I wanted a graphic that showed a magician in front of the stock exchange with Halloween stuff because, of course, we're going into Halloween. My favorite day of the year, and I love the picture because it even drew Merlin with a stein in his hand. Oh, thank you, everybody. Thanks, Chris. I know, you're probably missing the Pengrove Halloween parties, my friend. One of these days, we'll bring those things back. So, I'm just going to run through these markets, and then I'll do kind of an open Q&A. I had a couple broader market questions from Patrick, which I will probably save for actually our own shows, like its own standalone show. So let's dive right into what happened out there in today's markets. I'll work things from bottom to the top. Man, NASDAQ. I thought NASDAQ might struggle a little bit today, but I did not expect it to struggle like it did. Here is your NASDAQ 100 chart down 2.52%. Now, I've got several things on the page here. Number one was that red line. And I said, if we get below this, if we close below this red line, that's pretty bad because we haven't been below that line since middle of June. Well, we ripped down below the low we established on Monday. We closed below that red line, and now the last thing stopping this before it drops all the way down to right around 13,731 on the NASDAQ is this little yellow box that we are in the middle of right now. And that's kind of a demand zone that ranges from 14,286 to 14,511. So if we don't slow down and stop inside this box and bounce up in the next couple of days, expect more pain and more downside movement. I kind of feel like there's going to be a little bit of a bounce from this demand zone, maybe go a little bit lower tomorrow and then a rebound on Friday. But I won't be trading tomorrow at all just because I'll be trading from my phone if I do. And I don't know if I don't want to take that chance. Lori says NQ is still dropping. Yeah, and it does look, I brought this point up yesterday. Trend is your friend to the bend at the end. And we've said that many, many times over the years with you guys just because that's the core mantra that I try to go with. And at this point, the trend is heading to the south side. And I'm not so concerned with the trend for the past decade. That's not that big of a deal. I'm more of a short-term swing trader, which means I have to focus in on the last, 6 months to a year. And we've seen that thing reverse. NASDAQ 2.52% slide today. Thank you very much to Google and a couple other unsuspecting members of this. So Google was down 9.6% today. It's down another 0.82% in the after-hours session. But if you look at Amazon, for example, Amazon got crushed as well. Amazon was down 5.5%. Now, the one thing that kind of helped things out from turning into a complete meltdown was Microsoft. Right? Microsoft was up today 3%, although it's down a little bit in the after-hours session. Now, as Lisa says, so Meta and IBM won't save the NASDAQ. Well, let's look at Meta since they reported earnings, META, right? There's your Meta. We'll go to a 5-minute chart, and it's up in the after hours, but not huge. 3.8%, right? 3.7 right now. Not that big of a deal. It's pretty much back up to where it closed at yesterday. So not that significant, in my opinion, for Meta. Now, I haven't listened to any of the conference call or any of that information, but let's go about IBM. I to the B to the M. again, you look at IBM and you go, wow, IBM's, up in after hours. It's IBM, right? It's great, 1.8% in the after. Well, it doesn't have that big of an impact on the broader market indexes. It's not that big of a weighting in the, the S&P, the Dow, et cetera. So while we had good earnings from those two, and there are other companies out there reporting earnings, let me bring up the calendar here so you guys can see. You had beats across the board. I mean, the only thing that missed here, at least on this list, is Boeing. Boeing missed slightly on their earnings, and they were down 2.54% today, but Meta's beat it. Thermo Fisher beat their earnings. T-Mobile, IBM all beat earnings, and lo and behold, trying to save the markets and prop them up, but I doubt. Unfortunately, I agree with you that, we'll see how Meta holds up tomorrow. This is kind of stopping the avalanche. Today is just an extreme pain point for the Nasdaq. You get a 1% day, that's nice. You get to 1.5%, that's getting pretty aggressive. Then you start getting over 2%. It's like, oh wow, that's really painful. And we'll see if that continues again. I do think you'll see a bounce here. If it's not going to happen tomorrow, then I think you're going to continue to see this market go lower, just because the Nasdaq is running in that lower demand zone that goes all the way back into June of this year. So all in all, things look terrible for the Nasdaq at this moment. Russell 2000. Oh, why did I sell? Yeah, I can't regret it. But there we are. We're fulfilling this head and shoulders pattern to the T. You guys know we drew that one out a long time ago. I actually had this head and shoulders pattern drawn before it broke down. That was sometime in August, which is part of the reason I went short back in September. It's funny. I shorted that market September 1st, and since that day, the Russell is down 14%. And I did manage to capture the vast majority of that move, but I missed definitely today and a little bit back on this pullback here. So I guess I'll have to just second guess myself on that one. But again, we are right now on the Russell at 1662. That lower end target piece for this line right here is 1652. So we're 10 points away from completely fulfilling the exact measuring object of the head and shoulders pattern here. So I will eventually delete this one and call it a day. All right, let's go keep moving up this list. S&P 500 down 1.44%. I also brought up that point on yesterday's show. We start to see closes below this red line, and we didn't expect to get the next day. Here we are. Now the question becomes, where does this go? Right? You notice this area between April 3rd of this year and May, kind of that 2-month span, was just kind of choppy and sideways. I don't see anything there that really screams out at me that it's a strong demand zone that's going to cause some sort of move back up. There's only one thing right around 4150, which would be about 59 points below where we're currently at. After that, I think you're looking right around 4,000. And my gut tells me I think you're headed more towards 4,000 on the S&P. Not in a straight shot, right? I don't expect this to happen, next week, but maybe over the next couple weeks to month, we will see slow trickling down if this trend does continue to make lower lows and lower highs. So all in all, bearish outlook on my part. Tom says, laugh when I hear Meta and their failed attempt to shove our lives in the metaverse. Well, hey, at the time, Tom, everybody was talking about the metaverse. And it's funny, the more I played with metaverse stuff, the more I dove into it and actually was building characters and trying to buy and sell stuff in there. I like it. It's cool. But then I open up my curtains and look outside and go, that's the real world. That's more important. No one's going to remember anything I do in a metaverse game. I'm not going to remember the amazing sunset that happened in my metaverse game yesterday, right? But I will remember the ones that happened out here. I'm not going to remember the what was it, solar or lunar eclipse? I forgot which one we had just a couple days ago. But I'm not gonna have that experience in a metaverse game. And I don't know. I guess just better to go live your lives and build real life characters as opposed to artificial ones. Dude, I couldn't find your video today. Figure that link was one of my nerdy Dungeons and Dragons channel. Hey, I'm cursed and blessed with the name Merlin. It's funny. Growing up as a kid, I hated it. Everybody picked on me as a kid. As you get to be an adult, it's great. I was actually happy I got my name, so thanks to my parents for that one. People ask me what my nickname is. It's like, do I really need one? I mean, how many Merlins do you know? I've actually met about 4 in my day. One was nice guy. The other 2, not a really memorable experience. Nothing that stands out. And I remember one was just a complete jerk, and I told him, you don't deserve to have your name. That was a fun one. All right, let me keep on going down my list here. So that was the NASDAQ, the Russell, the S&P. I'm most concerned with the S&P simply because it's the dog that wags the tail, and it doesn't look like it has any real clear demand zones for quite some time. So, I think a lot of people would freak out when I say I think it's going to head to 4,000, but it's not that far away. 4,000 is roughly 5% away, so not that big of a deal in the grand scheme of things. I'll get more to the indexes and interest rates in just a second, but check out the dollar index. Dollar surged for the second straight day. Yesterday was the big up day. Today, kind of a little bit of a follow through. What I like about this one is, remember we drew this little demand zone. I drew this on Monday, and we actually hit it yesterday and then ripped up and are bouncing. So that becomes very much in play, would be this demand zone, which is between 105 and a quarter and 105.43 on the dollar index. So keep your eye on that one. If we break down below that, sigh of relief maybe for the equity markets. If we continue to rally here, more pain ahead. Yeah, I agree, Pepe. The S&P does look like a huge daily channel down. And again, it's just lower lows, lower highs. That's all I really care about. And it's funny, I talked to a friend of mine yesterday about this, and I just hold my head sometimes because I think people make it too complicated. He kept saying, oh, well, it's Elliott wave pattern. You can see we've got if you look here, okay, so here, let me be a nerd. More so than normal. And he was saying, oh, look here, if you look at Elliott wave, you got one, there's 2, there's 3, there's 4, and there's 5. So we're just about to reverse, and then we're gonna get that nice move back up, and then everything's gonna be fine. It's like, no, I don't necessarily think you have to go off of Elliott wave. Bottom line is, you go by what price is telling you to do. And in this case, here's that line. In this case, it's telling you to go short the market, period. Now, does it mean short right now? Probably not. I think it means wait for a pullback, maybe into a supply zone. But yeah, it's funny. I think people make it too complicated. Just go very simple. Lower lows, lower highs. Keep it going there. Remember, have you ever heard of ICT Trading Group? Someone told me they believe the market is not pushed by supply and demand, and they think it's an algorithm. What are your thoughts on this? Well, with very good results, huh? Well, the markets are driven by algorithms. The vast majority of trading is done by algorithms, so that I would agree with. However, what are the algorithms basing their information off of? The algorithms don't arbitrarily just say, okay, we're just going to buy just for the hell of it. Let's just push it one direction because we think it should go that way. They're reacting to price, right? They're programming in what's going on with price. And I'm willing to bet you that part of that algorithm is going to be what's the trend of the markets at that moment in time, and that's their bias. This is the way I kind of, I teach it, saying, look, if you got something that's trending down, your probability of making money is better going short. If you got something that's trending up, your probability is better of making money when it goes up. Or going long, period. And you program that into the algorithms, combined with, whatever indicators or oscillators they decide to use to bolster their decision-making process. But it's based off what's happening with the charts, typically. It's not based off of fundamentals. Those algorithms are looking at price action. So price action is driven by supply and demand. Therefore, I think indirectly, the ICT program is driven by supply and demand. So, I don't know, that's kind of the way I look at it. Any reason for today's heavy sell-offs? Like any earnings were that bad? Yes, I think the big part of it was Google and a shakeup in the tech sector and people thinking maybe those profit margins aren't going to be there. The realization that some things are slowing down. Although, let me finish our top 10 and I'll talk about the housing data. Housing data was actually really good today. I was shocked. But let me run through these and I'll go back into some of the other day. Market says, I always work for a while. Supply and demand never stops working. Supply and demand will always be there. And again, I think that the way the algorithms are programmed is based off of supply and demand and trend and maybe some indicators. And that's based off of supply and demand. So it's a chicken or the egg kind of discussion. So I just looked at the dollar index. Again, I think that the two things that are going to drive this market are going to be the dollar index and the bond market. So dollar index coming in 5th place today, up 0.27. This just switched over because the 10-year was actually leading, but I'll just do the 10-year now. The 10-year just rolled in the new session, so it looks unchanged, but you had a pretty significant spike today up in the 10-year. We're at 4.961. I got a little bit of a ridicule from a buddy of mine because he thinks that the yields are going to be coming down on the long end of the yield curve, meaning the 10-year, and I was like, I'll take the opposite side of that trade. I'm willing to bet you we're going to continue on up here. There's no reason for markets to all of a sudden sell off on the long end of the yield curve. Remember, we're inverted. Here's your market inversion. Here's the 10 and the 2. Now, the inversion is closing significantly, and there's a reason for that. I think you're starting to see rates come back to normal, which means the long end of that yield curve is rising and rising and rising. And that's what we talked about happening, right? You guys might remember I made that the point. I said only one of three things can happen. Was it three? First thing would be that the Fed slashes the short end of the yield curve. And you know that's not going to happen. They've told you it's not going to happen until mid next year when they start to maybe do cuts. So that's not going to happen. So then the other thing is the curve stays inverted forever. That's not what a free market will do. A free market will come back to equilibrium. It'll fix itself over time. And the third option was those long-term bond yields are going to surge higher, and that's where we are. I mean, it's not that hard to figure out. We've definitely seen that gap close, though. We were over 1% just back in July. Now we're at a quarter, just under 20 basis points. So that's good news for anybody who's looking at buying long-term bonds. It means the long-term bonds are surging higher. But again, the higher that long-term bond goes, the more it hurts the market. So I'm still keeping my target of 5.7, was it 5.79? 5.76 is what I had as my target for the end of the year, which would put us right at a 9% 30-year fixed rate mortgage. We shall see. That's a pretty lofty goal. If I line that up, that's a pretty steep trajectory. Although you can make the argument, I think you'd all agree that that angle of this red line right here, it actually follows what the trend has been doing since April of this year. So I don't think that that's too steep of an angle. It would just be kind of surprising that it would keep that angle for that long. So keep an eye on this one. This is the big driver. All right, let's go to gold today. Gold, nothing really to speak of. You had that just monumental move off those lows at the very beginning of October. We're down about 1825, and then we kissed 2000 on Friday, and here we are right back at it, 1994. Such a good year. Tonight I'm gonna party. No, wrong song. So that's gold. Crude oil having a little bit of an about face. We've had a 3-day slide, and all of a sudden up 1.97% today for crude oil. Technically, really nothing there to speak of. I don't see anything setting up as far as trade potential. Now, the big news, obviously off what we talked about yesterday, you had another update today. 34,840 is the price of Bitcoin, up 2.94% on the session. Flirting with that 35,000. My guess is, let me fix this chart here for us. My guess is it'll probably sell off in that 35,000 because it's such a big psychological number. It'll drift down and then it'll challenge that a couple times. And then ultimately we'll break through, particularly if we get this spot Bitcoin ETF approved. There's a guy named Anthony Popliano. He was actually on CNBC today. I got a link for it. You might want to listen to that one. It's actually a really good. His rebuttal and commentary with the host was real good. They were trying to throw him under the bus, and man, this guy really knew his stuff. I'm not trying to say I'm a fanatic of Bitcoin, like it's the only thing in the world. It's just an investment vehicle, but the probability just seems to be getting better and better. I didn't look at MicroStrategy. Let's check out the old master. See how Michael Crazy Sailor. Yeah, that's a pretty big hesitation, but right there. Lots of volatility, and all of a sudden open and close right on the same level. You've got one of two choices to do with this. My rules for this type of stuff. You keep it simple. You just draw a line on the top of it, line on the bottom of it, and if it breaks out of that range, go long or short, whichever way it breaks. Just putting a rally all hype. Does it have any legs? I personally believe it has legs. And it goes back to the article I wrote for Barchart, which is saying when you have all these firms that are going to need to buy billions of dollars worth of Bitcoin, physical Bitcoin, to fill those ETFs so people can buy them on the exchanges, all of a sudden you have this external force of demand that's going to bring in huge demand. Huge. So yeah, I think that certainly this is driven off of expectation. But if there is a finality to it, if we actually get an approval for a spot Bitcoin ETF, then I think that this is going to surge much higher. Do I have a link to that segment? You mean the one where I did the article I wrote? I think that you're talking about the article I wrote. Yeah. Here, I'll post a link. You guys can have all of my articles. If you want, I would say, Merlin, what's the reason you will be selling all your Bitcoin? I repeated that one a few times now. So let me post this into the chat for Sly Dog. These are the articles. If you want, I would say bookmark it. I would say bookmark this. It's all my articles I write. And if you scroll down on this one, this is for Barchart. What was the one? It wasn't probability of Shiba Inu. It was, I don't know why it takes so long for these things to load up. It's right here. It says how BlackRock can push Bitcoin to $45,000 by August. Well, my timing was off. I still stand firmly behind Bitcoin hitting 45,000. I think that could happen in a couple of days if they get approval. Oh, the conversation I referenced. Let me see if I can find it for you real quick. It was on one of the links I saw was on Twitter, but a very good conversation. And Anthony, a lot of people like him, some dislike him. I'm kind of neutral on it. He's a Bitcoin maxi, and I'm not a huge fan of Bitcoin maxis. Maxis are people who believe that it's only Bitcoin and that's all that matters, and anything else is a scam, it's a fraud. And I completely disagree with that. I think that there is plenty of legitimacy to other projects. Like, to call Ethereum a fraud, I cannot agree with that. I think the amount of platforms and things that have built on top of Ethereum is, it's impressive, and I think that that's going to continue. So businesses are seeing value in that one as well. So let me go and where was it? I'm scrolling like to the depths here. I don't remember where it was. I wish there was a link that would show me like what I watched recently, because I was let's gonna go Pompliano. Sorry, I'm doing this all live. Oh, look at it. Bitcoin is the most disciplined central bank. Yeah, I agree. Honestly, I feel like it's the only central bank. Everything else just seems... Here it is. One sec as I get the link up for you guys. Oh, great. They're going to make me pay for it. Are you kidding me? CNBC. I have to pay for the subscription to watch this on, but I can go to YouTube and I can watch it for free. There we go. We're going to YouTube to get it for free. CNBC trying to make me pay for this. Come on, man.
Now, Anthony Pompliano, founder of Pomp and...
Okay, I think the video is actually longer than this, but this is a segment of it. Really good conversation that he has, and talks about the potential for Bitcoin, what it means, and you can tell he's very knowledgeable about what he talks about. He's pretty much spot on. Okay, let's see. Good, got it there. What else do we have? Let's go back to my charts here, because I want to go look at one other thing. We talked about bonds, we talked about the dollar, we talked about interest rates. There was a couple things today. The Canadian dollar surged today because they kept the rates right where they expected. And I'll look at your economic calendar so you guys can see it. Canada kept it right at 5%, which is exactly what they said they were going to do. Now, for the U.S. markets, here's where things are interesting. You notice the expectations here for new home sales, which is, brand new construction. That's Toll Brothers, that's Lennar, and these types of guys. They're expected to increase 2,000 from 676 to 678. Came out at 759. Now, okay, that looks like a significant beat on those numbers. I like bringing up the charts because, we had 2 months of kind of decline in that, and all of a sudden, you look at the picture, it still looks like it's back in a nice uptrend from these 2022 lows. So all in all, very good news for anybody who's looking at real estate, simply because this is a sign that they're selling more homes. However, we cannot look at this without looking at that 10-year bond. And the 10-year, over time, it may not stop it immediately, but over time, this will slow down home purchases because it's raising that mortgage rate for everybody. Now, the other piece that's going to impact our markets, which we haven't talked about in a while, is what's happening with the Fed funds futures. What's the probability of them raising rates at that November 1st meeting? Well, right now, you guys can see there's a 99.7% chance that they're going to keep rates right where they're at. So no raise. Right now, a 0.3%. So I feel like I should put on my Jim Carrey mask and so you're saying there's a chance. Yeah, there's a slight chance, but probably not going to happen. Now, more intriguing is kind of in line with what Big Eb and I have been chatting about, or at least in the chat. Big Eb saying I think that they'll hold in November and they'll raise in December. I'm in that camp as well, although right now the probability says only a 24.8% chance that they're going to raise at the December meeting. So all things right now, at least from the expectation, is a continued pause. Now let's real quickly look further out. I'm going to go all the way to December of 2024. All right, so December of 2024 shows that rates are, from everyone's perspective, coming down. The expectation is we're going to be 75 basis points by next year in December, dropping a 27% chance of that happening. So, all right. The question is, when do they start to see that shift? It looks like it looks like it really starts to shift in March of next year. So expect a little bit of pausing, potential raising for at least November, December, January's meeting, and then maybe we start to reverse in March or May. May is really where it looks like things are starting to pivot a little bit. So just throwing that out there because I know a lot of people are like, oh, they're going to cut rates. Like, they wouldn't have jacked up rates so quickly and then come right back down. That's because everyone knows the interest rate is going up higher. You're right, Big Eb. It's probably that. It's people going, shoot, I'm pretty sure it's going to go up higher. I'm buying my house today because I'd rather lock in at 8% versus 9 or 10 or 11 or 12. But at some point that will peter out, right? At some point the qualification for loans at a 9% rate or 10% rate, you're going to start to weed out some people that won't be able to make that cut. Do I watch the JP? No, I just do the spot market unless I'm going to be trading. I haven't traded Japanese yet in a while, but let's go bring up USD JPY. I mean, I'm loving it. Japan really seems like the place to be going if you're looking at where the dollar buys you the most. 1%. Okay. What other questions you guys have? It's 2:27. It's a early. I probably going to do an earlier show today because I don't have too much to go over. I'm going to look at a couple different things here. Patrick has asked me a couple of times about profit takings after large rally. So let me read this one and then I'll answer this today. And there's another one that he wanted to do where I talk about the altcoins, right? So obviously you guys know I am a fan of Bitcoin. I love the math behind Bitcoin. I think that's why I'm most intrigued by it is just the math structure. It is a giant math equation and there's a definitive solution. There's no ambiguity to it whatsoever. So I like that about Bitcoin. A lot of these other ones, Ethereum, Cardano, Solana, Algorand, Chainlink, there are different metrics, different things that they can do. There is no necessarily fixed supply. The models change. But, why do I have 38 altcoins and Bitcoin in my portfolio? So I got Bitcoin as the coin. Everything else is an altcoin. Those are projects I see that may be disruptors. I don't know if anybody watched the Senate subcommittee hearing today. There was, it was okay, nothing great. It was the modernizing financial services through innovation and competition, which I think is where we're headed. One of the stupid officials, one of these stupid guys in the panel was just going nonstop. They get like 5 minutes to speak. In this case, they had 4. They get 4 minutes to speak, and I forgot which guy it was, but he just gets up there and all he did is rant for 4 minutes on why we need to elect a Speaker of the House and nothing matters. We're useless without a Speaker of the House. Like, no, you can do some stuff without the Speaker of the House. You can still work. Anyway, they had 5 different panelists talking about different segments of the industry, and you're going to hear more and more of that. There's going to be a lot more going on with regards to how technological innovation, fintech gets incorporated into the current structures, and maybe some of the current structures get dropped altogether for new technologies. And that's going to be an uphill battle because a lot of these curmudgeons in politics don't want to see those changes, right? They're being influenced by lobbyists to keep things the way they are, because at this point the financial service industry, the banks have a pretty good monopoly over money and what happens with money. Well, hopefully we'll see that drop when we get some new competition, which might make things faster, more innovative, but certainly want to protect ourselves from fraud and some of that other garbage. Okay, let me go to Patrick's question. He says, what do you think about taking profits off after a large move and then waiting for a pullback and buying? If price rallies and breaks out to the upside, doesn't pull back, or it bases before another impulse, who cares? You will still buy anyway. And if that rally is a fake out and you think you missed the dip, so you buy and then the price goes down, who cares? I'm holding it till November and in the 4-year cycle. Just wondering what you think on taking profits off the table or reinvesting at a lower rate. It's like swing trading, but there's no margin here, so I can buy and hold forever. Well, matter of personal preference. I am a fan of, particularly when I know we got a new speaker today. Wasn't who I wanted it to be, but it's okay. No, we'll still move forward from here. Hopefully they can stop complaining about the Speaker of the House and actually get some stuff done. With crypto in particular, Patrick, which I think what you're asking about, when I see a parabolic run, I'm inclined to take profits off. And, back in 2021, when Ethereum had this huge blow-off move, and same with Litecoin, I sold all of it, and I had large positions in those, and then they ended up dropping, and I ended up buying them out 30% lower. So I'm a huge fan of market timing. The dilemma is that you sell something that's rallied up. Like, let's say I sell my Bitcoin today at 35,000. The risk is that it jumps to 40, 50, 60, 70, and all of a sudden I'm left on the sidelines going, man, I should have held it. If you're nervous about that stuff, then don't. Just hold it. If you watch the video that I posted in the chat here, I want the 4-year cycle to pan out. And if that 4-year cycle does come to fruition, which, again, the question here was, why did I say I'm going to sell in November of 2025? It wasn't in 2023, 2025. That's based off that 4-year pattern. And then basically what it shows me is from November 2025 till November of 2026, the crypto markets will do nothing but go down to the tune of roughly 80%. Great. I'll be selling in November. And if I miss it, that's fine. But I'm pretty sure that going into November of 2025, we're going to have a pretty significant bull market rally. So I will sell everything regardless. And hopefully it'll sell off like I think it's going to do. And then, let's say I end up with a $2 million portfolio in, actually at that point, at those prices, it'll probably be about 4. Then I'm a $4 million portfolio that I sell out in November and prices drop 80% and I can buy $4 million back into crypto. Now all of a sudden I'm going to have, 3-4 times as much as I did before. So yes, I'm a big fan of selling into big rallies, particularly if it runs up in some area of supply that I feel like it's going to sell off from. But it's hard with crypto because of the thinness of the market, meaning there's only so many Bitcoin. It's not widely distributed. There still are big centralizations of it. You can get monster moves up or down, and that's just the nature of the beast. Emmers. That's who I want. I wanted Emmers. Tom Emmer. And the main reason is I like his views on business. I like his views on digital assets. He is slamming Gensler for, I would say, damaging America by not embracing technology, by ignoring the Bitcoin ETF, because now all of a sudden there's all these other technologies. And if Emmer's point is, if you keep pushing crypto out of the United States, it's simply going to go find another country, and then that country will be the power with regards to digital assets. We need to keep that power here, right? Keep the U.S. at the forefront. Not only does it keep us as a technologically superior with regards to the technology, but it also creates jobs. It keeps those jobs here. And then also, all of that becomes underneath we'll just say the umbrella of the United States, which of course is control and power. So that's who I wanted. He's got a lot of other issues I don't agree with, Tom Emmers, but I really want to see a change in our political leaders with regards to digital assets. I'm tired of the banking system controlling everything. And I mean everything. I think a lot of the stuff that you and I are forced to deal with is driven by the central banks, our banks that we choose, and we don't have much choice in that matter. Yes, I can go from my Charles Schwab account to a JP Morgan Chase, or I can go to a Ally Financial online, but that still doesn't give me a lot of choice. And knowing that the walls of those banks were built with my dollars and your dollars, I don't know. I just think it's been a system that's been abusing the American taxpayer for too long. If people want to have a bank account, great. They should be able to do that. But if I want to have a cryptocurrency account that is mine and I control every aspect of it, that's my choice as well. Granted, I have to assume all those risks. And I keep emphasizing that with people. And I think a lot of people just throw the caution to the wind with regards to crypto. It's probably the most dangerous asset class that you can get. If you lose your private keys, that crypto's gone forever. No help desk. Well, that's danger. That's bad. So, yeah, I wanted Tom Emmers. If you look at what he's done to Gary Gensler, I take my hat off to the guy. He's not holding back. He is blunt. He is very clear on why he's slowing things down. We don't need that San Salvador. Hey, El Salvador might. I'm really surprised we haven't seen anything done against El Salvador, because remember, El Salvador was using the U.S. dollar as their currency, and then they kind of gave the U.S. the bird and said, "Hey, we're gonna use Bitcoin." Whoa, what? The more countries that use the dollar, the more control we have over that country. And U.S. does not like relinquishing control. So, very interesting to see what's going on in El Salvador. Pretty interested in that whole transition from one of the most violent countries in Central America to one of the safest countries in Central America. Pretty cool. All right, that's all I had for you guys today. A very short show. Anything else you want me to talk about before we wrap up? I know I'm missing something, but I've got a brain fog going on today. Got a brain fog. Anything else you guys want me to talk about before we wrap up? Yeah, there you go. Hit the like button would help. Chio says, how fast could the Fed lower interest rates? Instantly. There's nothing that would limit them from lowering it. If they wanted to lower interest rates by 500 basis points tomorrow morning, they could make that announcement. Of course, you know that would cause a shock to the system and create absolute panic in the marketplaces if they did that kind of thing. So, okay, thanks, Thomasina. I'll check that. See? Brain fog. But yeah, they can lower or raise as quickly as they want. The key with the Fed, though, is incremental steps, right? Slow step, slow step, slow step, slow step. That's why, when you see something like a 50 basis point increase or decrease, that's big news, right? You don't usually see that. I saw 75 basis points a few times. I've seen 75 basis point increases. I've also seen 75 basis point cuts. When Ben Bernanke or Alan Greenspan did that one back in the 90s, man, that was a crazy day. I'll never forget. I mean, I could make a reenactment of that exact scene that happened that day, but they can bump it up or cut it down as much as they possibly want. Lisa, I did not get a chance to listen to Powell's speech today. I'll probably watch it after this as I sit and relax and detox, knowing I'm going to have 2 days of just nothing to do. So let's go into those earnings. Who is the bond expert? Not necessarily bond expert, but it's someone who is an Austrian economics expert, someone who loves the bond markets. He calls it the mother's milk of capital. And John O'Donnell. I'm going to hopefully have John O'Donnell on next week. I got to reach out and confirm with that one. But he really likes to talk about the bond vigilantes, which you're hearing that topic come up more and more. And so we'll look at what are bond vigilantes, what do they do, how do they function, and why should we be interested in what's going on with them right now. So let's go look at that earnings calendar. We only had a couple that were noteworthy today, right? There's your earnings calendar. You can see today you had Meta Platforms. We looked at that one. And then I also looked at IBM. Now for tomorrow, let's go up here. I'm going to do the 2 days for you. This is the biggie. And I was surprised to see Amazon sell off like it did today, knowing their earnings is 2 days away, right? There are actually the next day. So earnings for Amazon comes out tomorrow. Look at how Amazon got butchered today. I mean, it was ugly. Here's Amazon. Amazon broke down below those lows. And there were, I'll be honest, there were a couple of things that I was looking at as going long. I was looking to potentially buy a bounce here, but I thought I just don't want to take that kind of risk. You know, I'm sitting on some pretty good gains for the month of October. I don't even want to give any of that back, so I decided not to. And you know, part of me thinks this market's going to bounce. As I mentioned, I look at the triple Qs. Right, the Qs. There we go. You know, we're down below those levels, but you're sitting kind of in this demand zone right over here. For me, the break point for this would be if it gets below on the triple Qs, 346.51. So that's you know, a 1% drop from here, a little over 1%, and all of a sudden you're in uncharted territory and you've got these falling gaps, and that means, you know, that 331 becomes in play. I actually was looking at potentially selling the 331 puts, but the premium just wasn't there. Long ways away, but we'll see. Margaret says, leaked news. You know what? Good question. Let's see. You know, one of the ways you can look at leaked news would be volume. And if volume is, you know, so exponentially high, then yes, something must have leaked out. You look at today's volume, and yes, it's high, but it doesn't, you're going to have high volume on a day where you have panic like you did. All right, it's obvious high volume day like today. So let's go look at a 15-minute time frame here. Volume started off because the Nasdaq was, so I would call this just kind of a normal volume day, even though it's higher than normal. It was more of a panic, a high excitement day for Amazon. So it doesn't feel like anything got leaked out there. No. What did Mike say? Merlin, you posted that 4-year cycle study yesterday in the chat for Bitcoin, but it's not there anymore. Can you repost it? Yeah, sure. I think I should have just a hot link to some of my videos. That's really what I should be doing. I think that's the easiest way. Let's see, Barchart. In that video, there's 2 videos I did for Barchart. One was kind of the 5 questions asked about cryptocurrency, which, you know, that was a fairly basic, really kind of an overview of it. And then there's this one that I did. They asked me to produce a video for them. So here is the video I did for Barchart. There's that one. Kind of expected Santa Claus Rally to catch a base today. Goog made a mess of things. Yeah, we're a little bit early. Santa Claus Rally doesn't necessarily have to start, November 1st. Now let's wait a couple of weeks and see if we do find a footing or if this downtrend continues. I am of the belief that we'll have a Santa Claus Rally just because it happens more often than not, and I can't go against probability. However, we look at these price charts. Let me real quickly bring up Amazon. We'll go to Qs. Here I was just about to leave and finish the show, and you just pull me back in. All right. So let's go back here. Would you call this a Santa Claus Rally? I'm going to put a vertical line on January 1st. All right. Would you call that a Santa Claus Rally, folks? No, sir. And you're thinking, well, we had a nice rally for November, mid-October to mid-November, but as soon as December kicked in, last year was brutal. It was a pretty ugly down month for the NASDAQ. I can't even talk. Let's go the year before that. Let's go see what that looked like. Okay, so here is the end of the year. Would you call this a Santa Claus Rally going into it? It looked like just sideways. It really didn't do much. So I don't know if I'm necessarily that excited about Santa Claus Rally. I think that it'll happen just because, again, statistics. If we go to 2021, here's your Santa Claus Rally. That one, it worked, right? So for the couple months before that, we had a really nice rally up. That one was fantastic. But the last two have not been that exciting. Now, granted, this one here from 2021, from December 20th to December 27th was a monster rally. That was fantastic. Gotta love that type of rally. I'll give you the percentage gains here from the bottom to the peak there. 7% in 5 days. Oh, hell yeah. But then it drifted off near the end. But it was trending down before that. So I don't know. Certainly the one that happened in 2022 was garbage. And here we are. Let me put a vertical line on our New Year's break so we can have that as a reference point. There we go. Going into that line, what happens? It's the fill in the blank picture that's going to be worth a lot of money to you or cost you a lot of money, right? Fill in the blank. What do you think is going to happen with that picture? I don't know. I'm telling you just from what I look at here, all I'm doing is looking from that peak there. This is really what I'm expecting. I'll leave this line here. It's right there. That's the upper side of the channel. So for me, if you have a Santa Claus Rally, you'd have to start breaking out of that and move to the upside. But right now, it doesn't feel like it's going to. It feels like it's just drifting lower. And until this top downtrend line is broken, my bias will be to go short. Big Eb says, since 1971, Santa Claus Rally has been up 98% of the time with an average of 13% gain. Definitely very different, huh? Strange times now. The old phrase, everything works until it doesn't. Very relevant with this one. Isn't the strict definition of a Santa Claus Rally one that starts after Christmas and runs into very early July? Yes. It's the last 5 days of the year and the first 2 of January. That's according to Stock Traders Almanac. That's Yale Hirsch is the guy that came up with that. So we give him props. Yale Hirsch is the guy who came up with that. Last 5 days and the first 2 is the Santa Claus Rally. So I think the industry has a belief that it's the whole month of November and December. Yeah. So again, everything works until it doesn't, right, Big Eb? I will collect my 5% to be happy. Yeah. I mean, if I can get an extra 5% on my portfolio for the remainder of the year, I'll be okay with that. I mean, 5% for 2 months, that's 2.5% per month. I'm fine with that. That's a 30% rate of return per year. Okay. I'm good with that. All right, guys, I'm going to go clean up, relax. I'm going to go take a nap. The long night with trivia last night. I would play one of my trivia questions for you, but it was my final question last night. It was a good one. I really like it. It was, if you play the song, I cannot play it for you because I'll get censored and I'll get a copyright violation. But if you play Beat It by Michael Jackson, the way that track worked is Michael Jackson had the idea for it, right? And he wanted some good guitar riff. So he went out and he asked this guitarist to come and just noodle a riff for him based off this. And this guitarist came in and just shredded the guitar solo on that. So one of the trivia questions was, on the song Beat It, and I had it playing in the background the whole time, what guitarist is it that is playing in the song Beat It? I'll leave that one with you just for some fun. Thank you guys so much. Talking Monkey, you got it already. Yeah, Eddie Van Halen. It's an unlikely combo. A lot of people last night said Prince. I'm like, no. Michael went to Eddie Van Halen and he ripped it. And it's funny, when you hear the solo, there's no mistaking. I mean, you can hear the finger tapping and it's like, oh yeah, that's Eddie Van Halen. But funny to think that Eddie Van Halen, the rocker, was on a Michael Jackson track. Kind of cool. Anyway, that will do it for me, guys. Thank you so much. Enjoy your 2 days off without me. I will hopefully make it back on Monday, and then next week I'm gonna try to bring on some guests, and we'll see what I do for Halloween. But you guys take care. Thank you so much. If you have questions, things you want me to talk about next week, let me know. Send it in to TraderMerlin@gmail.com or down below any of the YouTube videos. I will see you guys next week. Take care.